This is session 4 of 6. This one is Pitfalls of Trading. And it's kind of an extension of last Tuesday's tirade on problems of trading and emotions and so forth. All right, just a brief note. Much of the material so far has been about stocks, not options trading. However, I want to point out, when you trade options, you're really trading the underlying stock. So in case any of you are saying, when is he going to talk about options? Well, I already am, in a way, because when you're deciding on what option to trade, you really have to analyze the underlying stock. There's only a few extra things you need to know about options, which we'll cover in the next 2 sessions. Somebody just asked, you've missed a few sessions. Are they available in recording? Yes, all of these sessions are always recorded. Always, always, always. Now, they're not always up on the website immediately, but they are recorded. We usually try to get them up within 24 hours. It's a long process because they need to be converted to a certain format, and they're giant, they're large, and it's quite the task. But as we speak, the last 3 sessions are up on the site. And what you do is just go to our homepage, garrowsworld.com. You'll see a kind of an ad for optionality. Click More Info. It will bring you to a page that has a login box on the right. You log in with the username and password, and there is the materials for future registration, for future webinars, and also the recordings of the ones we've done so far. All right, demons from within. Dun, dun, dun. You know, like I said last week, only 25% of your winning efforts have to do with technicals, you know, charts, analysis, that sort of thing, but 75% has to do with discipline. And I don't want any of you to have to learn that the hard way. By hard way, I mean losing money before you get it through your head that you have to be disciplined. But this is an extension of that, and it's demons from within. So to recap, only 25% of your winning efforts are technical. At least 75% of winning involves discipline, money management, stops, allocations, etc. There is only one certainty in trading. One certainty in trading. You will have losers. That's the only thing I can totally guarantee that will inevitably happen. All right? That's important to know because it's how you handle the losers is what makes you or breaks you. So most of your discipline involves handling losers. Here are the most common pitfalls, and some of you are already familiar with many of these, but you newcomers are not necessarily familiar with these yet. Number 1, I haven't talked about this much, but it's a key factor. Inability to articulate the reason for a trade. You know, if you decide you're going to trade a certain stock or option, whatever, if you can't look to your friend and explain to him in English why you're going to trade this stock, then it's probably a bad trade. That's what I mean by articulating. Okay? Examples of articulating a reason would be something like stock is breaking through resistance and has a good volume. Okay, that would be a good articulation. The score is high, stock has strong buy volume and has room to run. That's another good articulation. It doesn't need to be, rocket science. You just need to know the exact reason why you're trading it. Stock is bouncing off a strong support line. That's another good articulation. Now, here are some bad examples. These are some bad ones, all right? This sucker is going up. All right, that is not a good one, all right? That is meaningless. That's just gambling. I need to get my money back. That's a good one, huh? How about this? I don't know. I just have a hunch. Now, that being said, believe it or not, hunches and gut feelings are actually valid. I mean, I use them all the time, especially in assessing the market direction, that sort of thing. But you cannot use it as the articulation of why you're trading, because otherwise you're just going to lose if you're going purely on hunches and nothing else. So my point is that if that's your only articulation, if you look at me and I say, why are you doing this trade, that you just say, I don't know, I have a hunch, that's not good enough. It's okay to have a hunch, but you got to back it up with some actual facts. How about this one? Gar is trading it. That's actually not a good articulation, folks. I make mistakes. And sometimes, in fact, a lot of times, I'll give out trading ideas, and 3 of them ramp up, and I end up trading the one that doesn't, So I'm not God, even though my name starts with G. So if that's your only articulation that Gar is trading it, that's not good enough. If you can't articulate exactly why you are entering the trade, then don't trade. Okay, so inability to articulate the reason for a trade is one of the demons from within. Averaging down, this is a biggie. This one is the worst you could ever do to yourself. Okay, what do I mean by averaging down? Here's an example. You decide to buy 200 shares of some $10 stock. Okay, so the cost is 10, the stock is 10. All right. To your dismay, the stock plummets. It's now down to $8.50. Ouch! All right, okay, so far so good in the sense that you're down a lot, but you haven't made it worse yet until you decide to buy more. You say to yourself, well, if I buy another 200 shares, now the cost is only going to be $9.20. That's what the Wall Street means by averaging down, because you keep buying more and more at a cheaper price, and that makes your cost average lower and lower. It's very deceptive, because what happens is stock plummets again. Remember, Murphy, as in Murphy's Law, parks a tent next to the stock market, and he's looking for a way to burn you. And as soon as you average down, I can almost guarantee that stock's going to plummet. And so, of course, you buy more. You're now in it for 600 shares, and your cost is, yeah, granted, your cost is way lower than the original $10, but you are way, way behind. You are now massively down. A $2,000 trade is now $6,000 loser. You see the problem. I'm going to give you a real life story. This actually happened to me. Okay. When I originally started studying options a number of years ago, I decided to do an experiment. To that point, I had only done stocks. I had heard nothing but horror stories about options, so I was reluctant. But I decided to give it a shot. And I opened up a $500 account. All right? Said, if I lose $500, so what? That's not the end of the world. In 30 days, I rented up to $2,100. Man, it was fantastic. All right? I thought I died and went to heaven. This is all a true story. Then I entered a $300 trade. Market tanked. I think it was one of those time periods where the market was really flying downwards. I was so sure on this trade that I doubled up. Cheaper price, right? Now I'm in for 600. That led to a death spiral. I kept buying more and more. To make a long story short, I was in it 3 times the amount of my original. No, I'm sorry. That's actually a typo. I was in it for 6 times for 1,800, watching it sink. Options expired worthless. Now, had I bailed at my stop rule of 50%, in other words, I have a rule where I bail out on an option at 50% loss, the account would have been 1,800. Instead, it was now only 300. You see the problem. All that work that I did, all that hard work of running a $500 account up to $2,100 was lost. on one stupid, boneheaded trade. My point is, this was a real story. You know, I could rationalize it all day long and say, well, I only lost $200, right? I started with 500. Oh, I'm only down 200. Yeah, right. No, I lost 1,800. Because when I was up to 2,100, that was my money. That was mine, right? So there's no rationalization. It was just the stupidest thing I've ever done. So don't do it. So averaging down is a no-no. I'm calling that a demon from within because there's this underlying urge from within to get your money back, you know. Oh man, I know this stock's going up, you know, that kind of thing. It's ridiculous. You don't know anything. You're just playing the odds, right? If the odds are turning on you, then get out. Okay, this is a close cousin to that, loading up or going all in. I don't need to say much about that, right? That's obvious. Loading up means, what does loading up mean? That means going way above your normal allocation. You know, in options trading, you should never trade more than about a fourth or a fifth of your whole account power. If you end up trading half of your account or 3/4 of your account, you're setting yourself up for a catastrophe. And of course, all in, you know. That's also, by the way, this all-in thing, that's a real problem with really, really small accounts because if your account is really small, like, say, $400, you almost have to go all in because you don't have much of a choice. If you don't go all in, you can't overcome the commissions. So all this ties together, you see. You have to have enough to have a reasonable trade without going bust if you lose the trade. Here is a good one. Forcing a trade. I put a little note here, explain what I mean by that. Okay, forcing a trade means that you just can't stand not trading. So you're sitting there going up and down the list, looking at the scores, looking at charts, and you say to yourself, I don't really like anything very much. But what happens with a lot of people is they just can't stand the idea of not trading, so they end up picking one anyway and going into it anyway. And it usually doesn't work out. Sometimes it does, but often it does not. The weird psychology of this is that you think that something's going to get away, you know, like you're missing out on something. But you got to get rid of that. If that's true, you got to get rid of that mindset because I got news for you. The market will be there for you tomorrow. Or if it's Friday, it'll be there on Monday, you see. The market isn't going anywhere, but your money could sure go somewhere really fast if you force a trade. Sometimes the best trade is no trade. As a matter of fact, lately, at least for myself, the no trade is turning out to be one of the best winners of them all. And I think some of you can relate to that in the recent market. There's just days, you know, even the great Jesse Livermore, greatest trader of all time, in his book, Autobiography of a Stock Operator, this guy was a champion. You know, rumor has it, or legend has it, and I think the legend's true, that Jesse Livermore made $180 million going short on the market in 1929. You know, in the big, big market crash. I believe that story because he was a master at that sort of thing. 180 million back then is like billions of dollars today. And he said in his book that he would go for weeks and months without trading because the market conditions were just wrong. And I wouldn't recommend going for weeks or months, but I could certainly see going for a few days and not doing a single trade. I've done that before. I've almost done that recently. Like any of you who follow Gar's Gold, I haven't done a whole lot of trades. So don't force a trade or you will be very, very sorry for it. And of course, the infamous demon, letting a loser run too long. I touched upon this last Tuesday, 2 days ago. I'm telling you, this is the nemesis of so many people. I mean, to this day, I'm chatting with people on the forum, and they're telling me they're sitting on, let's say it's an option, right? And say, well, they expire tomorrow, and it's going to be worthless. I mean, I admit I've done that myself, but come on, don't do it over and over and over. And then there's people with stock positions. I can't tell you how many conversations I've had with people who've given me horror stories about their portfolio, and they're sitting on 6 or 7 giant super losers, like minus 49% or something. And I'm just thinking, shouldn't you have sold that thing when it was like minus 5? But I don't know what it is in people's mind, why they do this. I think it's that hope and fear thing. I really do. Where you hope when you should fear and you fear when you should hope. So I think that's the human psychology, which works in life but does not work in stock trading. You see, in life, when things are down, you have hope, right? You got to be optimistic. You got to have a positive attitude and go get them, that kind of thing. It doesn't work in stock trading. When you're down, hope has no room because hope is just going to let that loser get worse and worse. So I think that's what's going on. I think you got to flip that hope and fear in reverse. If you're losing, you should be so scared of losing more that you should get out of that position. If you're winning, you should be hopeful that it's going to do really well and you'll get more gain than you thought you would, and you'll get the gain that you deserve, you see. So hope and fear, I think, is what this is all about. Don't let a loser run too long. Have strict discipline rules to cut the loss at a certain point. Know up front where you're going to cut that thing, too. See, that's another problem. If you don't know where to cut that thing, then you're going to let it get away because you'll say, well, I'll let it run for 10 more minutes. Well, I'll hold it for one more day. That's the beginning of a suicide mission. You make a decision. As soon as you enter that trade, decide, okay, if this stock gets to X, I'm out. Now, there are conditions in which you can't do anything about it. Like if you're holding overnight and there's bad news and the stock craters, okay, you can't do anything about that. But even in a situation like that, at that point, you still got to decide when to bail. What I usually do if I'm stuck like that, like if something plummets overnight, I usually reassess it, and what I do in that case, I decide, okay, if I got in right now, where would I cut this thing? That's what I do. So, let's say it plummets 5% overnight. You would never let a loser go 5%. Let's just say, okay, so it's now groveling at minus 5% at the open. You don't just sell it. It wasn't your fault, right? What I do is I say, okay, if I entered the stock right here, where would I cut it? And that's where I'll set my new stop. That's the way I'd handle that situation. But that's sort of an exception, not the rule. I know I'm right about this one as another culprit to the holding on to a loser. Humans really don't like to be wrong. Because to be wrong is to not survive, you see. If you had a life or death decision in your life and you were wrong about the choice you made, you'd be dead. So inherently built into every human is the urge to be right. And you got to fight that thing sometimes, okay? I know it will ramp up if I sell. That's another reason people have a hard time letting go of a stock. I know it's going to go flying up as soon as I sell it. That's nonsense. Sometimes it does, That's them's the breaks. That's water under the bridge. How about this one? This is the most common one. I can't sell now. They reason, well, I'm so deep, like what's the point of selling now? Yeah, right. Okay, that's like saying, I'm so sick now, what's the point in getting well? I mean, it's ridiculous. Your position can always get worse. Okay, so letting a loser run too long is a no-no. And you guys that don't follow that rule, you're going to learn the hard way. So I'm hoping you don't have to learn the hard way. So there they are. Inability to articulate the reason for a trade, averaging down, loading up or going all in, forcing a trade, letting a loser run too long. All right. Debugging a slump. What I'm going to show you here is probably, in my opinion, the most valuable lesson of every single session we've had. Here's the deal. Everyone gets on a slump. For example, I've been on a trading slump for the last couple of weeks. If you follow the GARS Gold model portfolio, I've had way more losers than winners in the last week or two. So I would call that a slump. Every endeavor gets in a slump, all right? So, like sports players, everybody. Writers, there's a writer's block. Whatever profession or endeavor, there's a slump. I want to show you how to debug it and get out of it. And this works every time. Here's what you do. 1, you locate your 3 most recent losers. All right, if you have a lot of losers, then take the worst 3. Analyze each one. Discover what you missed. And I had a little note here. There is always something you missed. It is never bad luck. You will eventually discover, as you're doing this, that you made the same error on all 3 trades. Same one. And this is phenomenal, but I have never seen an exception to this. Every time I've done this exercise, it always comes down to that. There's one common error that you've made on all 3. It's the most amazing thing. Then part 2 is then you locate your 3 most recent winners. If you have more than 3 recently, then you take your best 3. Analyze each one, discover what you did right. You will eventually realize what you did right was the opposite to what you did wrong. Right? This is incredibly accurate. And part 3 is using the info from part 1 and 2, you adopt new firm policy to avoid the repeating errors and to strengthen what you're doing right. And I guarantee you this will get you out of your slump. Here's an example. You analyze 3 losers, all right? They all looked like good setups at the time. You then realize that all 3 were long positions in a falling market. Uh-oh. You analyze the 3 winners. They all look similar to the 3 setups for the losers, but you then realize that all 3 winners were in an up market. Well, what do you know? Therefore, your new firm policy is no long positions in a down market, all right? I'm making this a little simple. It's usually a bit more involved than this, but that's an example of what you would discover. And sometimes it's hard to see the forest on account of the trees. So that's why this exercise works, is you can see things you weren't seeing before. Now, guess what I'm going to do? I'm going to debug my own slump right now in front of everybody. I'm going to humiliate myself and do that exercise right now live. And I'm going to figure out the common error on the 3 losers and the common good thing on the 3 winners and adopt a new firm policy. Now, mind you, this is live. I haven't done this yet. I have not done this on my recent trades, so I'm going to do it live. But I have to open the Pro. I never opened Optionality, so let's do it. I'm going to use Optionality-Pro to... it says there's an update available. That's funny. That's because I think I have a previous version on here. But I don't care. I'm going to use it anyway because I only need to show you the trades. Okay, let's take a look at them. And to do that, let's go into the model portfolio. Yeah, look at that. You see that? I have a whole string of losers, one after another. So I need to debug this. Okay, let's take one at a time. Let's take the worst one first of the most recent three. The worst one here is that guy. That was a long time ago. So I don't want to go that far back. But let's take that one. LPI, which was entered on the 28th. Let's get rid of these indicators. Now, so what I'm doing is I'm taking the losers. I'm trying to figure out what I missed. LPI on the 28th, which is where? That's 28th. Yeah, okay. That was my entry right there. I think I held it overnight. You see what happened, don't you? My entry was right here. I held it overnight, and the thing plummeted. The reason I'm trying to figure out the reason I liked it. I liked it because it was going up and it was on a support level, which is right here. And if you can look at that carefully, you see during the day, I could tell by that bar, during the day it was actually traveling up, but then it got pounded back. Okay, I know what the error here is. I know what the error is. This day here was a super down market. In fact, I think this day was a down market. The day I traded it, was it the 28th? Let's check. I don't remember. If it was, that was a really stupid trade on my part. Let's see here. Let's look at SPY on the 28th. 28. Yeah. By golly, it was. Here, let's take a closer look. Okay, then that was my knuckleheaded mistake. Remember, there's always something you miss. It's never bad luck, all right? You got that? It's never bad luck. It's always something you overlooked. I discovered that years ago. As soon as you're thinking that you're a victim of bad luck, then you don't understand what's going on. What do I want to try and do here? I want to get a smaller chart, smaller interval, so I can see what the 28th is. Okay, the 28th itself wasn't that bad, because here's the 28th right here. Yeah, here's the 28th. That band of bars there. I'm looking at a 30-minute chart. It was sideways, but the down market was fierce prior to that. This is SPY, S&P 500. Look at that. Look at that down slant. And the market really wasn't recovering. So I was essentially trading in a bear market, trying to go long. That was my main error. That's the only error that I can see that's obvious. Let's look at another loser. How about the next big loser here, percentage-wise, was this one, SPF, which was traded on the 23rd. Come, that didn't work. Let's find it here. SPF. Well, wait a minute. Let's double click. How about that? Yeah, okay, SPF on the 23rd, which is 23. That wasn't an up market, so I didn't trade it. I didn't trade it in an up market there, did I? Let's take a look at let's see what errors I made on this one. Yeah, 23rd. I traded it right here somewhere. Okay, now I didn't make that same error there because pretty much, at least at this time interval, it's a upward market. But okay, the problem that I see is, we take a closer look. Okay, here's an error. There's an error right there. Here's a technical error. I don't know what that line's doing there. Here's a technical error right here, is that it was right near resistance. Here's your resistance line. See, that was stupid of me. It was sitting too close to resistance. And sure enough, it fell. And then, to make it worse, I did hold it in a down market, which is right here. I held it overnight, and I let it run probably too long. As soon as I saw that down market, I probably should have exited. So I also held it in a bad market. But the real error was this resistance thing. I'm curious. I wonder if I did the same error on the other one, LPI. You know, I might have. Oh, let's see. It was on the 28th. Yeah, there it is. The same error. Here was my entry point. Okay, yeah. Okay, see, I missed that. This is why you have to really analyze these. This is also why you have to find the common denominator error. Look at that. Look at that resistance line. And I entered it right near that resistance. What a stupid thing. How do I know that's resistance? Because it was resistance back here. Right here. A few days ago. This is the previous one we looked at. I didn't even see that. Okay, so 2 in a row, we got too close to recent resistance. Let's look at one more, and I'll bet you anything we had the same problem. That was this guy. Well, let's look at this one. This one's a worse loser. That one is TER. That was entered on the 23rd again. Yep, same mistake. Same mistake. Here's your 23rd, all right? And check it out. This is mind-boggling. If I go to its previous recent resistance, there it is. My entry point was, I think, somewhere around here. It's way too close to that resistance line. And sure enough, it falls. What do you want to bet? I was sitting there thinking that I have to do a trade, you know, the forcing trade thing. I'll bet you anything that was my mindset. I kind of don't remember. I might have only had 4 hours sleep. The point is, guess what, folks? I just discovered that all 3 losers were done when they were sitting at recent resistance. Recent meaning in the last few days. I mean, it's one thing to look at a chart and see long-term resistance. See, for this guy, the long-term resistance is probably right there. But I'm only doing, you know, a trade for like 1 or 2 days, right? In that case, I better look at recent resistance to be safe. Anyhow, so there you go. My top 3 losers, I made the mistake of too close to resistance. Now, without even checking, I'll bet you that my top 3 winners were far away from recent resistance. What do you want to bet? Let's look at them. I have to go back a ways. Let's look at that one. WPX. That was a nice winner. That was on the 13th. 13th. Let's look at a chart here. 30-minute chart so we can see it. 13th, 13th, 13th. I got to go back a ways for that. Here's the 13th. Was that entered? I think that was like a lunar type play. Yeah, I think it was. So I entered near the close. And I can see why. You know, guess what? It's way far away from resistance. It's way far away from resistance. Look at, that's where I entered it, right? I think that was an end of day play. And guess what? Lo and behold, recent resistance is here. But look where I got in right there. So I had a nice run. I had a really nice run all the way up to it. Okay, there you go. There's one. Let's look at two more. ACI. Where did I enter it? Again on the 13th. Yep. So 13, 13, 13. Yeah, same thing. I think that was also an end of day play, if I recall. I entered it right here. Whoops. Yeah, I entered it right here. And guess where its near-term resistance is? It's right up here, or somewhere abouts. But look, I had a nice little spike there. And let's look at one more. Remember, I said you want to do 3 of these to confirm. God, I've got too many charts going here. I feel like I'm in spiderweb land. I feel like I'm on the PowerScan forum. Okay, when did I? This Gale was a really nice winner. Where was I on that one? That was on the 13th also. $13.13. I had a good day on the 13th. I don't think it was Friday the 13th. All right. Yeah, that's 13th right there. That's where I entered. Oh yeah, you see, look at that. Resistance is. This was the same day. This was not a. End of day play. But check it out. Resistance is here, obviously, because it failed to break through that point. But look at that. It broke through resistance, and that's why I entered it. So it's way far away from recent resistance. So there you go. The new firm policy, by now debugging my trades, the new firm policy is what I did wrong 3 times was I was too close to recent resistance. What I did right 3 times was I was way far away from recent resistance. Duh. So my new firm policy is no trades near recent resistance. And now that'll probably break my losing streak. So I hope all you guys understand this, because it's very, very key. If you feel you're in a slump, you need to do that exercise, because I have never seen that thing fail. Remember, what you're looking for is the common denominator of your winners and losers, because you keep making the same mistake over and over and over. And that's the real reason, by the way, why you have a slump, is because you keep repeating the error. And this is not as long as last Tuesday, but that's all I have tonight. And I think that's enough, because I think you need to digest it and think about it and apply it. And I can answer questions now. Okay, I see quite a few here. Bush asks, what's your normal hold period? For me, personally, like 1 or 2 days. Usually that's it. That's what I personally like. Some people like it longer. Some people like to do quick day trades. Let's see, somebody said SPF, decent score in a very red market, could work for upside. Yeah, you're right. I remember making that comment. Somebody just quoted me when I did SPF, but guess what? What I missed was it was close to recent resistance, you see. Paul asks, what about a checklist? Check for resistance, for market direction, etc. Yeah, you could make a checklist. That's not a bad idea, because sometimes at the heat of the moment you forget to look at obvious things. It's not a bad idea. Maybe I'll make a checklist for everybody. What percent loss or gain would you suggest as when to sell? That's a good question. However, I don't usually go by a percent. Well, if I had to go by a percent, I don't like to, on stock trades, I don't like to lose more than 2.5% as a rule. But on option trades, I'll go 50%, 50% as a rule. But there's a better way, and I'll show you. The better way is to decide by looking at the chart where you ought to bail. And by that, I usually just go by its support. Let's just take a stock at random. Just pure random. Let's take this one. I mean, let's okay. Let's say, on this particular case, let's just say, for argument's sake, that you're trading this when you're in this is a current position. Now here's the deal. If you're in this position and it's trading about right there, you see, well, you got to make a decision is at what point is this stock a goner? At what point is this stock toast? I would say it's if it breaks through that support level right there. I don't even know what percent that is, but that'd be a good place to bail. So in this case, if I were trading it, if I'd set a stop, I'd set it right below that, like somewhere like down there. Because when these stocks break support, they have a tendency, not always, but a tendency to keep falling like a knife. So I pay more attention to the recent chart. I'm looking at a 30-minute chart here. I pay more attention to recent support than I do percent loser. But as a hard and fast rule, I don't like to go more than -2.5. Yeah, I've let it go more than that in the past, but it's always a mistake. Somebody here says, on Tuesday webinar, you stated that we should look at stocks that perform well to a certain pattern. Isn't that what Midnight Review should be used for? If so, is there any plans to add the same filters to display only options in Midnight Review that exist in Optionality? You know, somebody else, it might have been you, sent me an email asking me how I can look at just the option stocks in Midnight Review. The answer is you can't, because Midnight Review was created a long time ago, way before we had this option software. So it doesn't know anything about that. But I don't know. I could put it on the drawing board. It depends on how many people would really want that. What I am planning on doing in the very near future, I am planning on creating a whole new product or add-on, if you will, or feature, which tells you, if you just look at any one stock, it'll tell you which filters or indicators that stock responds the best to. In other words, instead of starting with an indicator and having it give you a list of stocks that do well, be the other way around. You open up this new thing, and it'll say, this stock responds best to X. The reason why that would be so valuable is most people, myself included, like to trade from a watch list. You know, especially options. There's a certain finite list that I like to trade from. I was showing this last Tuesday. It would be super valuable for me to know what I should be looking for each of those watchers, because they all respond differently. That will be out soon. Somebody says, I saved several charts with trend lines and indicators. How do I retrieve the charts with my saved data? You know, you don't. The purpose of those lines and boxes or so on is just to visually see things. But the main purpose of those drawing objects is to show other people. You know, like I originally added it just so I could put links on the forum and say, hey folks, check out this breakout. You know, so I'll have a line and an arrow and that sort of thing. You know, if you want, see, the reason why I can't, let me explain why. You might think, what? Why can't I just save the lines? Well, the answer is because the chart will be a whole different chart tomorrow. And if it's an intraday chart, it'll be different 10 minutes from now. You see, so like the lines will be meaningless because the chart will have shifted and moved. Now, if you absolutely need to save, want to look at the same chart again, one trick would be to post it to a forum. You know, you can do that with the software. You can post examples to the forum. If you go into the chart window, you can do that. You can always retrieve that yourself and see the same thing that you sent everybody else. But like I said, the problem with saving the object, the drawing object, is the chart might not be the same chart. If you absolutely want the same chart, well, then take a screenshot. I mean, I don't know what else to say. You know, if anybody else have any better ideas. On Tuesday, when you showed a watch list, I noticed the watch list doesn't show the scores like the main screen. Why is that? Yes, it does show the score. It only shows the 3-day score on the watch list right now. A lot of them might not have had scores. I know people have been saying, why can't we see all the different time frame scores? Yeah, okay. I mean to add that, but, you know, we can't do everything all at once. So in other words, here, let's take a look. The watch list. This is the watch list you were talking about. Yeah, see, the right-hand column has the scores. Well, it's a little bit cut off there. I wonder if I can. I might need to adjust this column here. I can see that's cut off. But the scores are on the right column. See? I can sort by them. But in my particular case, I understand your concern, but in my particular case, I don't care about the scores if I'm monitoring watchers. I care about the setup for each one. That's why I wanted to have a nice little report of which setups work good with each of these guys. That would be really awesome. The other thing I'd really like to see, you know, I think I know how to fix everybody's wish list. I really think the watchers, this is really what I need to do. You guys can tell me later what you think about this. Instead of having this separate watch window, how about if there was some kind of clone button to clone? This is the main screen, right? How about if you could clone this entire window and turn that into your watch list? That's really what we want, isn't it? That's what we want. Because, like, for example, right now you're seeing all the stocks, right? Well, let's say you only want to see this one, this one, this one, and this one. I mean, let's just say, well, if I added a clone button, it's not here, right? But let's say it was. The way this feature would work is you hit clone, and up would come a whole replica of this window, except it would only have those stocks that I have selected. You could save that. So every day you get up, you could open up that window, and those are the only stocks you have in the list. The reason I thought of that is because the one thing I don't like about the watcher window is I can't look at the option choices. You know, I have to go back here and then find the stock and then to see what options are available, like that, you know. Great. You guys had me think out loud, and that is the answer to everybody's wish list on those watch windows. That is the answer, is to clone the main window, and that could become your own custom list. Yep, that's what I need to do. So consider it done, folks. It'll be done in the next, well, I don't know how long it'll take, but we're going to have to do that. All right, so any other questions? I don't see any other questions or comments. So this one's been a little shorter than the other ones, but that's good. I don't want to jam everybody with too much info. So there's 2 more of these for all you guys who have optionality, whether it's trial or real, next Tuesday, next Thursday. And on that note, I'm going to shut down, and I thank everybody for attending.